I got to ask what you make of the ongoing list of companies, not just warning really, but saying we don't know enough to warn at the moment.
Yeah. I think that's number one, right? The number one takeaway we're getting from the board level, from the C-suite, is just be prepared, be ready. Whether that's for what could happen because of Corona, whether it's pushing for an IPO, whether it's an M&A deal, the best you can do right now, given that we don't know what's about to happen, is just be ready for your current plans. And I think it's interesting, when you take a look back and sort of sit there and say, how do we get where we are today and where are we truly? In 2019, as you know, the markets were up pretty strong, right? So S&P up about 29, NASDAQ up about 35%. However, as I've pointed out before, you had that anomalous fourth quarter in 18 that took you down 20%. So if you actually look across that, you actually had the S&P up about 15%, NASDAQ up about 20%. Strong, healthy, but not ebullient, right? So sort of reasonable. Now you bring that forward to today, and what do you actually have given what's happened in the first half of the first quarter so far of 2020? You've got the S&P up about mid-single digits. You've got the NASDAQ up around double digits or so, and that goes from October 1st to basically today. So you haven't had this really wrong, over-effervescent run in the markets right now. So I think you're seeing the markets.
You don't think there was a chase on high growth in the NASDAQ, in Tesla, and Virgin in the first quarter?
There absolutely was, and that's what you saw right before the drop, the all-time highs, right? So you saw that little spike right here. So when I make my comments as to where we are today versus the beginning of the year, so you did have a spike in between, and then it's come back down. But I think more importantly, when you pull that lens back and sit there and say, okay, any given month or quarter, things could spike or move out of the way, but let's actually look over those 15 months. And where are we? And what I think you're seeing right now is it hasn't been ebullient. It's been sort of prudent by the markets, quite honestly.
So you're arguing that where we are now, and of course we hope on the ground as far as people's health, that condition continues to improve. But market-wise and tech stock-wise, where we are is reasonable.
Yeah, and it's interesting when you peel it apart. So the tech market, where are we in the tech market? Well, last year in 2019, everything was up, right? So you're just strong across the board, right? But when you peel the onion back into that same analysis, let's get it from October to now. What you actually see is only two that are up. It's semis, which was very strong, software, which has been very strong as well. And in fact, for year to date today, 2020, the only tech market that's actually up is actually software, which is flat. And everything else is somewhat down.
What we're hearing out of the likes of Microsoft, HP, perhaps Dell later today about having to push out guidance and say we don't know exactly what's going to happen. It's striking that that's happening as we're seeing plateauing numbers as far as new infections over there. That's good news in a way, but we're just starting to see the impact on companies and uncertainty flowing there. What does that mean? Does that mean that we're going to see these same concerns from companies plateauing a couple weeks out in a lag? Does it mean we're going to start hearing about demand disruptions out of Europe because we see what's happening in Europe and South Korea?
Yeah, absolutely. And none of us know for sure right now. But the one that I thought was interesting was last night when Priceline, Booking.com actually reported, right? They actually had to take guidance down, as we all know. But what I liked about the story, or what I thought was indicative of the story, was that while the guidance came down, the stock's actually trading up today. So I think part of the question has to be is what's baked in so far, particularly for the sub-verticals that we would all think would be most impacted, whether that be travel, tourism, those types of things. And then how do you actually think about the sub-verticals that will actually benefit, whether it's, Teladoc last night, even Peloton not going to the gym, delivery, depending on what's going on there. So there's a bunch of different areas that can play well depending how this virus goes.
Yeah, your point's a good one. Expedia down only 1%. Marriott's up.
Yeah,
Marriott's
absolutely,
up.
right?
And they were one of it was their turn in the machine last night.
Yeah. I think the other thing to look at, by the way, too, as we think about IPOs going forward, is how the IPOs, fared during this market. So if you bought all the tech IPOs in 2019 and held them to today, you'd be up about 25%. Not bad, right? However, if you look at maybe only from the first day pop to today, how would you be? Because you can't build a full position just on the pricing. You're going to be down about 8% or so, right? So it hasn't been that great. What I think is maybe even a little more interesting is that any portfolio manager needs to build a position over a little bit over time. So if you look at day 30 to today, how's that been? Down slightly. So the IPO markets, the point I'm making, haven't once again be ebullient as well. You've seen a lot of IPOs, you've seen a lot of investor discernment on these IPOs, everything leading up to WeWork pulling its IPO. But I think that shows a level of healthiness, quite honestly, in the market.
So what's happening to the IPO window now?
Yeah,
I mean,
great.
we just saw DoorDash confidentially filing an S1.
Absolutely.
They could sit on that for a long time if they need to. So
yeah, what I think I would take it to is all the conversations we've had with boards and with the C-suite is none of us know what's about to happen with the coronavirus. So therefore, let's continue along as planned, and we'll adjust along the way. So if we're going for an IPO, let's keep pushing forward to that IPO. And I think you saw them do that today with DoorDash. If it's M&A, let's continue to push along with M&A. You saw Morgan Stanley and E-Trade, right? You saw Intuit and Credit Karma. Let's keep pushing along. I mean, you're coming off an M&A market that was the fourth best M&A market of all time, and you've got a lot of capital on the sidelines. Private equity's rated all-time levels high. Venture capital has a lot of capital. The companies have a lot of cash on the balance sheet. So I think the IPO market will continue along, but to your point, I think we'll adjust. If things get drastically worse, then maybe things get pushed off. The last point on that is the election. We should just be wary of the election. I think a lot of companies' initial plans are, let's get our IPO done before July, or at least before August. And now the question will be, do you get a push out of that because of Corona? And if so, does that go after the election, or would it slip into 2021? So you'll see those plans adjust.